This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The European Union proposed a price cap on Russian gas on Wednesday after President Vladimir Putin threatened to halt all energy supplies if they took such a step, raising the risk of rationing in some of the world's richest countries this winter. The escalating standoff threatens to drive up sky-high European gas prices further, adding to already eye-watering bills EU governments are paying to stop their energy providers collapsing and prevent cash-strapped customers freezing in the cold months ahead. Europe has accused Russia of weaponizing energy supplies in retaliation for Western sanctions imposed on Moscow over its invasion of Ukraine. Russia blames those sanctions for causing the gas supply problems, which it puts down to pipeline faults.
China's crude oil imports in August fell 9.4% from a year earlier, customs data showed on Wednesday, as outages at state-run refineries and lower operations at independent plants caused by weak margins capped buying. The world's largest crude importer brought in 40.35 million tons of crude oil last month, equivalent to about 9.5 million barrels per day, BPD. Data from the General Administration of Customs showed. That compared to 8.79 million barrels of oil per day in July and 10.49 million barrels of oil per day in August 2021.
Moving on to the top news in the energy sector.
The United States is using Russia's own estimated cost of oil production of $44 per barrel as a guide as it seeks a Russian oil price cap compliance regime, Bloomberg reported, citing an interview with Deputy Treasury Secretary Wally Adeyemo. Adeyemo said, "We're not going to set that price below Russia's price of production, but will be a level that still encourages Russia to produce, yet not allow it to gain benefits," the report added. The U.S. Treasury is seeking to design a simple compliance regime for enforcing a price cap on Russian oil exports and hopes that China and India join the coalition or at least take advantage of it, Adeyemo said on Tuesday.
Oil prices fell by more than $3 on Wednesday to their lowest since Russia invaded Ukraine on demand fears stoked by looming recession risks and downbeat Chinese trade data. Brent crude futures were down $3.40, or 3.66%, at $89.43 a barrel by 13:38 GMT, touching their lowest since February 3, and falling below $90 a barrel for the first since February 8. U.S. West Texas Intermediate crude fell by $3.42, or 3.94%, to $83.46, reaching its lowest since January 24 as recession fears moved back into the spotlight. Next, we have the top news in metal markets. China imported 26% more copper in August than a year earlier, customs data on Wednesday showed, as lowered prices and stocks amid power rationing enhanced the appetite for foreign supply. Unwrought copper and copper product imports into China, including anode, refined, alloy and semi-finished copper products, totaled 498,188.60 tons in August. That compared with the year-earlier volume of 394,017.10 tons, a two-year low. The annual increase was attributed to cheaper prices in July and August that sparked buying interests among producers.
The European Union needs to reduce power costs in the region to prevent the permanent closure of metal-producing plants in the region, which would increase reliance on imports with higher carbon footprints, Industry Association Eurometaux said. About 50% of EU aluminium and zinc production capacity has already been forced offline due to the power crisis, Eurometaux said in a letter to EU Commission President Ursula von der Leyen. EU ministers meet on September 9 to discuss urgent measures to respond to a surge in gas and power prices that is hammering Europe's industry after Russia curbed gas deliveries to the bloc.
We will now look at the top news in the agricultural sector.
China's soybean imports fell 24.5% in August from a year earlier, customs data showed on Wednesday, as high global prices and weak demand curbed appetite for the oilseed. China, the world's top buyer of soybeans, brought in 7.17 million tons in August, versus 9.49 million a year earlier, data from the General Administration of Customs showed. The figure was the lowest for the month of August since 2014. It was also lower than July's 7.88 million tons. The low import number for August was expected, said traders and analysts.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.